Today, I will be diving into a major trend. Wall Street is heading south. Yes, giants like Goldman Sachs, BlackRock, J.P. Morgan Chase, and hedge funds led by tycoons like Ken Griffin, Citadel, Steve Ross, related companies, Paul Singer's Elia Management Corp., Steven Schwartzman's Blackstone Group, Incorporated, and many more are moving operations to South Florida, with West Palm Beach emerging as the new epicenter. Let's explore why this is happening and what it means for the future of finance. Why are they heading here, and why South Florida? The allure of South Florida: tax benefits, lifestyle, climate, etc. By choosing South Florida, financial firms get the best of both worlds. An idyllic setting with no state taxes, big savings on office space prices, and close physical proximity to some of Wall Street's key companies. As more and more finance companies and firms choose to leave the Northeast, they are finding that South Florida has everything their businesses need to fully function and thrive. According to Bloomberg, Wall Street financial services firms are moving out of the Big Apple and relocating to the Sun Belt, a region of the United States generally considered stretching across the Southeast and Southwest, and taking nearly $1 trillion in assets under management with them. About 158 financial institutions, managing $993 billion in assets, have aggressively set up offices with staffs in less expensive locations like Florida and other similar states. According to data from 17,000 corporate filings compiled by Bloomberg, Ken Moelis, the CEO of investment bank Moelis, told Bloomberg in 2020 that his bankers wanted to leave New York City for the Sunshine State. In response to their request, Moelis replied, "We're a talent business. I want to attract, I want to motivate, and I want to retain the greatest talent in the world. And if that talent wants to do it in Florida, that's where we'll support them." Goldman Sachs shocked the industry when it announced its plans to move part of its asset management section into South Florida with at least 100 of its traders and sales representatives to West Palm Beach. Those slated to move reportedly include the bank's most senior executives. Goldman Sachs leased office space in West Palm Beach inside 360 Rosemary, related newly constructed office tower. Other notable 360 Rosemary finance tenants include Point72 and Elia Management. From a New York Post, native New Yorker Carl Icahn has officially left New York City for sunny Isles Beach in Florida. The billionaire activist investor has entered into a lease for a 23,463 square foot office in the new Milton Tower, becoming its first tenant. He now occupies about 1/5 of the building, including both the penthouse and the 12th floor, Milton Tower announced this week. Reported by Hedgeweek. Another native from New York, Paul Singer's Elia Management Corporation. During the pandemic, Singer's hedge fund relocated its headquarters to West Palm Beach, Florida. A significant driver behind the move was that John Pollock, the co-chief investment officer and Singer's expected successor, along with other senior executives, relocated to South Florida.
Please like and subscribe. Please leave comments.
Virtu Financial Inc., a highly successful electronic trading firm, is the most recent Wall Street player to set up shop in Palm Beach Gardens, Florida. According to Bloomberg, roughly 50 people, or 10% of Virtu's U.S. workforce, will be working there. From Bloomberg, Virtu Financial & Company CEO Doug Sifu commented that the move into South Florida represents a shift in the way it has operated in the past. Sifu stated that ultimately, work-life balance has become, and probably always should have been, an immensely important part of what companies should be striving for. And if we can do that in a manner consistent with our ability to provide great service to our clients, as we witnessed in 2020 and the first part of 2021, then, to me, it's an absolute no-brainer. PineBridge Investments is a New York-based group will be adding a location in South Florida. The private global asset manager announced it would be opening its new location in August of 2021. Tracy Ahern, PineBridge's chief financial officer and chief risk officer, commented on the move, stating that PineBridge is on an exciting growth trajectory, and we believe that the South Florida region has a robust and diverse talent pool to support our ability to exceed our clients' expectations. This is just a small token of financial tycoons who have made their trip from New York to Florida. With over 57 billionaires with strong residential ties to Palm Beach, according to a Palm Beach Daily News analysis of the 2023 Forbes list of the world's wealthiest people. So now we need to dive into who are the billionaire tycoons most responsible for turning West Palm Beach into the epicenter of the financial industry in Florida.
Please like and subscribe. I appreciate all comments.
Two of the biggest names are Stephen Ross and Ken Himmel, related companies CEOs. Two of New York's most powerful real estate moguls. They had a huge part along with some others in turning that area of West Palm Beach around. Once was a very dangerous drug-related area. And now it has a nickname, Wall Street South, with apartments that sail for $25 million. From the New York Post, Ross and Himmel are a driving force behind the area's rapid transformation. They have 8 commercial and 4 residential properties either open or in the pipeline in West Palm, and are developing the neighborhood's central retail area, the Square. Space in their buildings has been snatched up by well-heeled NYC restaurants such as Milo's, Felice and Harry's, the Wall Street Hangout. We are providing a lifestyle and trying to make West Palm Beach a model community for the U.S., Ross told the Post. Everyone says how lucky we are, but we were already here to take advantage of the opportunities, said Himmel. Though locals worry about further congestion created when some new buildings open, the developers say they are conscious of their civic responsibility. Landscaping, public green space, and art are being added, while both Related and developer Jeff Green are constructing affordable housing rental buildings and have donated land and money to the University of Florida, which is building a 1 million square foot satellite campus for grad students. The grad school will be a total game changer, said Green, who's unveiling 2 commercial and residential towers at One West Palm Beach that will be the highest in the area. Apart from all the jobs that will be added, those students will stay and build their businesses in West Palm. West Palm will also have increased medical needs as its population grows. Top medical providers like HSS, NYU Langone, and Mount Sinai have all taken space in the area. Developer Ned Grace is also making an impact. His company NDT is part of a group behind NORA, an acronym for North of Railroad Avenue, a 40-acre neighborhood with a cobblestone main street and 15 acres of new development that just broke ground and will open in phases. We think there is a real opportunity to provide a cohesive, curated commercial area, said Grace.
Please like and subscribe if you like the video.
Andrew Curd, co-chief investment officer of Savannah, is also pioneering West Palm's North End, developing the luxury tower Olara. He notes that in addition to the tax-friendly environment, West Palm is very welcoming to all the growth. The city is committed to working with developers, and we are working with Citi to support infrastructure, he said. Our project will be helping drive 1,000 jobs a year. Curd is confident his building will be a hit. Our 3 competitors, Bristol, La Clara, and Forte, are all sold out, and Alba is half sold, he said.
Please share comments and like and subscribe.
Private developer Jeff Green is another big hand in developing the West Palm Beach area. He is probably the largest owner of land in that area of West Palm Beach. He has developed many properties in the area. Now let's look at the impact this type of growth can make on our area. On the positive side, job creation. The relocation of major financial firms brings high-paying jobs to the area, significantly boosting local employment. For instance, when firms like Goldman Sachs or hedge funds like Citadel move operations, they bring with them a demand for financial, administrative, and support roles. Increased tax revenue. More high-income residents and businesses contribute to higher local tax revenues, which can fund public services and infrastructure improvements. Real estate and local business development. Real estate market. Demand for high-end housing drives up property values, leading to a boom in real estate development, which can revitalize neighborhoods. However, this can also lead to gentrification, pushing out lower-income residents. Cultural and educational enhancements. Cultural attractions. These tycoons often invest in or support cultural institutions, enhancing the cultural landscape of the area. Small business support. With increased wealth in the area, local businesses benefit from higher consumer spending, although this might also mean competition from new, upscale establishments. Education. They might fund scholarships, endowments, or new educational facilities, improving educational opportunities. Now, how negative impacts the local area. Inequality and gentrification. Economic displacement. The influx of wealth can lead to gentrification, where rising costs of living push out long-standing residents, particularly those with lower incomes. This can change the demographic and cultural fabric of neighborhoods. Wealth concentration. While the overall economy might grow, wealth tends to concentrate among fewer individuals, potentially increasing economic disparities. Local business strain. Competition. Local businesses might struggle to compete with larger, wealthier enterprises that tycoons might bring or invest in, potentially leading to the decline of mom-and-pop shops. Housing market distortion. Affordability. The demand for luxury homes can distort the housing market, making it less affordable for average residents. This can lead to a housing crisis where only the wealthy can afford to live in certain areas. Dependency on finance. Economic vulnerability. An economy heavily reliant on finance can be volatile, subject to the ups and downs of financial markets, which might not provide stable long-term growth for all sectors of the local economy. I answer all comments and questions. And please like and subscribe.